And welcome. This is Mary Ellen McGonigal with your Friday afternoon MEM Edge show. And as always, this is the show where we show you where the action is in the broader markets. A little bit of wobbliness last week. As usual, we will take a look at the broader markets and see where did we close. From there, a deep dive beneath the surface. You want to have a really good understanding of where the strength was last week and relative to where it has been year to date, kind of keep that flow going. And then also what is impacting the broader markets. And of course, as we move through, I will share that with you. Now we're going to start by taking a look at some of the headline news, that economic data that helped push stocks around. And as usual this week, earnings was a big driver as it relates to your biggest winners and losers. We'll take a look at the number one on both sides there. I'm sure you're going to be well familiar with those names. And then beyond, let's take a look at some of the economic data that was released last week. We did get the first estimate for fourth quarter GDP, and it came in quite strong. 3.3% growth for Q4 is anticipated. In turn, we did see fears of a recession recede. So that's good news. Equally good as the week progressed, in particular today, core PCE data was released. That's personal consumption data, expenditures, and it's very closely watched by the Federal Reserve. This is a key metric for them for inflation, and it did show that core inflation is slowing. We are now at a 2.9% level. As you all know, the Fed is targeting 2%. So we are in the throes of a period where we may see what's called a soft landing, where the economy continues to grow despite the recently elevated interest rate environment that we've experienced. Now, of course, we're only in the beginning stages of earnings. Next week, we have some very key data that will be released. Microsoft, Alphabet, Meta Platforms, and Apple, all due to report their earnings. And of course, that can really impact the broader markets. And you'll want to be aware of where interest rates are situated. So we'll get into all of that and more right now. Let's go ahead and take a look at where the broader markets closed for the week. And here we are with the daily price chart of the S&P 500. And the S&P did advance about 1% for the week, in turn keeping this near-term uptrend very firmly in place. We do have positive momentum with that RSI and that MACD, both in positive territory. And we got very good volume on last week's rally, which is another good piece of the puzzle. So net uptrend remains there. From here, let's go ahead and take a look beneath the surface at those 11 sectors within the S&P 500, a 2-month daily price chart view, and adding that relative strength indicator. I've sorted the list of these sector ETFs in descending order so that the strength, those relatively stronger ETFs or sectors, are up here at the forefront, and then down below, these are your weaker areas. This view really allows not only a current view, but if you stay on top of this, you'll be able to uncover rotation as stronger groups recede into the backdrop, and likewise with weaker areas coming to the forefront. So let's go ahead and start there with one area that had been down in that weaker quartile for weeks, and this week certainly a surge. Here we are with XLE, that is the energy ETF, up almost 5%. A lot of that having to do with geopolitical strife, the Red Sea, and then also a drop in oil production levels, in turn did push energy higher above these key moving averages. It's not an area that I would participate in. I would need to see more by way of a stronger fundamental backwind before getting too involved, but certainly it is of note. Also, when looking at this potential rotation as far as groups into the forefront, let's take a look. XLC, which had been sitting up at the top for quite some time. This is communication services, and it is primarily heavily weighted with internet-related stocks, but this week very firmly at that front right, left side. And what we can see is a very confirmed uptrend. This was the second best performing sector, up 4% for the week. And as many of you, we talked about the earnings outlook. Let's take a quick look at one of the top performers last week. And this is one of the key ingredients for that move into XLC. Here we are with Netflix. You can see this gap up into a base breakout, super high volume, indicating accumulation characteristics as the stock continues to ascend, 19% upside with further upside potential. Now, let's go ahead and take a look at some of these other sectors. Financials up here at the forefront, also outperforming the broader markets, up 2% for the week. Bank stocks continuing to recover. KRE is that regional banking ETF. Actually, I will get into that in our next segment, but that is one of the drivers here. We can see financials in a nice confirmed uptrend with that MACD black line up through the red for the financials. And this is quite constructive twofold here. We have growth areas such as internet-related stocks on the move higher, and then financials, which tend to fare well in a period of economic growth, those GDP numbers certainly supporting that concept that we'll see increased lending activity among those banks. So let's go ahead and move forward. Tech still up here at the forefront. It did underperform, actually it performed with the broader markets. Two of the heavier weighted names here are due to report their earnings next week. Apple and Microsoft combined comprise about 20% of this sector. So it will be very telling to see how they come out with their earnings and, of course, how the markets respond. One last area that we can take a quick look at that's beginning to potentially spark a little. It did underperform the broader markets, but take a look here at consumer staples, a little pop higher here. Again, not an area for me that I would overweight, but this is all about earnings, Procter & Gamble. So you will see these pops, if you may, in some of these sectors as some of their heavier weighted names come in with strong earnings. And then I did say last, but we will be remiss to not take a look at XLI. This is the industrial sector up in line with the broader markets. You can see this black line up through the red, poised to turn bullish. I'll share with you an area in industrials, all again earnings driven, that is driving this particular area higher. So from here, let's go ahead and take a look at some sub-industry groupings beneath the surface of those sectors. And this is a way to get more defined and refined as far as having knowledge to where that relative outperformance is taking place, and then also where the weakness is beneath the surface. So first up here at the forefront, IGB, software stocks, no big surprise. This has been up at the forefront, certainly year to date. The group outperformed a bit. There certainly are areas of relative strength here. I'm going to share with you a couple of stocks, and it is going to be earnings and sales growth related. Of course, those outperformers are going to be bigger by way of having stronger growth prospects. And then up here, up in the forefront is semiconductors. They did pull back quite a bit. Again, earnings driven. From here, we can take a look at Intel. If you were following the markets closely, you'll know that the stock fell 12% today, all about decreased outlook for their growth into next year. Certainly concerning. And there certainly were other names that also fell in response to earnings in that semiconductor group. But to be real, this group certainly was due a pullback. We had that overbought position on that RSI. This is SOXX semiconductor ETF. Let's go back, take a look at some of these other underlying groups that are highly relevant. I talked about bank stocks. This is KRE, the regional banking ETF, not overly exciting, but you can see that it is inching back above these key moving averages, certainly into a more constructive phase. We would be remiss to not take a look at the yield on that 10-year Treasury, which really feels stuck up above 4%. It's at 4.16. This is one key ingredient that needs to be monitored because interest rates above this level have had a real impact if we go back July into November, when growth stocks in particular, as well as the broader markets, stumbled due to that higher rate environment. And then industrials, I talked about that group kind of moving a bit higher. Here we are with the Dow Jones Transportation Index, and it was up a bit this week, all about airline stocks, also rail stocks. So we're seeing vibrancy there. Now, we also want to be aware where that relative underperformance is. And really the weakest area is XRT, and that is this retail ETF, the S&P 500, but it's beginning to show signs of potential life. Take a look at this MACD black line potentially coming up through the red. Retailers are the last to release their earnings, so we're still not in that zone yet, but certainly when you look at these underlying ETFs, and from my work, a lot of them are going to be growth oriented. Most of them are in a constructive period. So from here, let's go ahead and take a look. One subject that I did want to review, and I've done this in the past, and that is how you can use ETFs such as those we've just reviewed to get a good sense of where there may be relative outperformance. So I'm going to share with you some smaller ETFs, but certainly the names that are within and heavier weighting in these smaller ETFs are going to be larger cap. So first up here is IDGT. This is the iShares Tech Networking ETF. And you can see we've had quite an advance here since November. This ETF did have a period of base building, but note that it did not fall so much at the beginning of the year as a number of other growth stocks did, and you can see the advance higher. So from here, I will go ahead and share with you a couple of the heavier weighted names in this ETF. It's all about digital multimedia networking. We can take a quick look at a winner here is ANET, Arista Networks, ANET, in a nice confirmed uptrend. But there are stocks that are heavier weighted in this ETF that are in the beginning stages of potentially reversing their downtrend. First up here is Cisco, CSCO. You can see that it's now above each of its moving averages, heading higher. And also the momentum is in positive territory. One other name that is a heavyweight in this ETF that we can take a quick look at is Qualcomm. And of course, Qualcomm did get hit with the broader market or the broader decline in semiconductors, but not as heavily hit. You can see that on Thursday, it was able to withstand downward pressure elsewhere. And then today's pullback was very, very benign, low volume. So still a winner. And again, keying in on those ETFs can provide you with insights as to where that relative strength is in the broader markets. Next up here is JETS, Jets. We did see United Airlines report their earnings this week. Delta reported earlier this month. You can see reversing its downtrend here. And then also LUV came out with numbers. These airlines are posting strong results. And again, these ETFs are a great way for you to be aware of areas and pockets of strength. Last up here, I'm sharing with you a view of the S&P 500 MidCap ETF. So we can see that it did experience quite an advance going into the new year, pulled back. And then this week, it now is showing signs of retaining a presence above its moving averages. We have this RSI in positive territory, and then the MACD poised for a black line up through the red. Actually, I did want to show you IWM. Let's just go ahead and take a minute here because it was the top performing major broader market index, and very, very similar. This is the Russell 2000 ETF in the throes of potentially reversing its downtrend. So getting back to MDY by way of MidCap, I did want to show you how you can use StockCharts to get your arms around pockets and where that relative performance, that relative strength is emanating from. So on this first page interface, I have it set up so that in the center on the bottom with my reports, I have the StockCharts technical rating. For those of you not familiar, this is a highly refined rating. The higher the number, the better. It does go up to 99. And so from here, I did select MidCap. Now we can do the same for small caps, ETFs, US industries, and large cap names as well. We're looking at the top 10. In fact, let's just take a quick look at that large cap area. And then from here, I will go ahead and share with you in the large cap space a candle glance view. And that is a look at the names today in the large cap space that were up the most. You can see their SCTR ratings are not super high. They are quite simply among these scooter rankings, their rankings have gone up the most. Now, this top 10 is equally powerful, and you'll recognize many of the stocks on this list here for large cap. So let's go ahead and back. We were going to take a look, and we will, at MidCap. And again, using that StockCharts technical rating, the top 10, you can see how they do all have that 99 and above. So from here, if on the lookout for individual candidates, quite simply, take a look at that candle glance view. And from here, I will drill down and share with you at least one name that certainly looks quite interesting. It is a smaller cap biotech name, so you would need to be comfortable with that. You can see these smaller cap names by nature are going to be more volatile, but this is ACLX, Arcellx, and we can see that we are experiencing this nice base breakout today, nice high volume, and then that MACD black line up through the red crossover that is taking shape today. And then from here, another stock that we can take a look at that is also on the move higher in that healthcare space, OSCR. You can see that this stock also experienced a nice base breakout, potentially on its way higher. So that is one great way to stay on top of moves. You can do either, again, that top, those that are the highest ranked, and those that are among the biggest scooter ranking advancers on the day. From here, another area I want to point you toward is this market movers. I have it set up with the S&P 500, and then these names are up the most on a given day by percent. And this is a list that will sometimes shift throughout the day, but oftentimes you will see stocks hit this list and continue to advance higher throughout the day, depending on how the markets are performing. And this is for shorter term investors, a great way to get in on these bigger movers. I'm going to go ahead and do a candle glance view here because oftentimes two things. You'll be on the lookout for moves into particular areas so that you can spot strength. This is American Express, came out with great numbers, gapped up into a base breakout. We can see that super high volume, but also SYF is another financial name that it has been advancing and is just now posting that black line up through the red. And last up, I did want to share with you COF, which is another financial corp that is in the throes of reversing in this MACD. So that is where you can not only spot movers on the day, but also thematic moves. And I did say last up, but I do want to share with you Airbnb. And we can see that this particular stock up 5.5%, double bottom formation into today's base breakout, high volume. You can see that black line up through the red. Let me share with you one other view for those that are more active in their trading. My trading does tend to be a little more long term, but for those that are shorter term, I'm sharing with you ABNB on a 1 hour price chart, and you can use those same attributes that you would on a daily chart on the 1 hour and spot these breakouts. So here we are with the price movement. This is your first print bar for the day, and Airbnb waffled a bit, but it wasn't until midday that it really came to life, and the stock did experience a base breakout with positive momentum, and there's that shift, black line up through the red, and you could have taken advantage of that move into the close. Now, from here, I did want to share with you just a couple of other names that have experienced breakouts, are on the move, and again, keying in on those areas that are exhibiting outperformance. So we talked about software stocks. I will share with you a couple of names that are on my radar, potentially trying to reverse their downtrend. This is Oracle. Now, the thing I don't like about this chart is these gaps down that have taken place twice over the last 5 months. And all about this movement here was excitement over Oracle's AI possibilities. And then the drops were management citing the difficulties of possibly monetizing their AI capabilities, but it is potentially trying to come back into play at this time. Another software name that's due to report earnings next week is Atlassian, TEAM, and it's setting up here quite nicely above these moving averages with positive momentum that is not particularly high. Really, this back and fill formation going in, they're due to report next Thursday, is always a lot more enticing than if the stock were rallying strongly going into their report. Intuit, INTU, this is a stock that is and has been on my MEM Edge report suggested holdings list. I've added a blue 5-day simple moving average. Stock very much in a confirmed uptrend, finding support at that upward trending 5-day simple moving average. And then last up, we did talk about XRT retailers, some of them firming up a bit here. Let's take a look at a couple of names that are in fact sitting here quite nicely. This is DKS. This gap down again is concerning. This was all about earnings and the fact that the company was experiencing a lot of losses due to theft, but they've been able to fill that gap and then from here break out of this base and trend higher. We'll have to see how they do with their earnings. And then another name well known in that retail space that's potentially beginning to reverse its downtrend. This is Lululemon, LULU, finding support at that upward trending 50-day. On the lookout for a move in that MACD, a bullish crossover, get that RSI in positive territory, and it could be a very, very interesting stock. And that's it for this week, everyone. I hope you have a fantastic weekend. If you like what you've seen, go ahead and hit that like button. And any questions you may have, I'd be happy to address them going into future shows. See you next Friday.